Good morning, everyone, and welcome. Good morning for some, good afternoon to some, good evening to some. I'm Nathaniel. I'm in charge of international marketing in Bitmain, and I'll be your host for tonight. So welcome to CMF, or Crypto Mining Forum North America Online Edition. Before we begin, first I'd like to share a few words and thank everyone who's taken the time to attend this event. I know we have attendees from all around the world who joined to listen in today. Thank you. I'd like to first share why we're hosting CMF. We first held our first CMF in the US during 2018. This was to meet with our customers and to update them of Bitmain's new products. And from then, we held it in different locations around the world. As we learned that more and more people became interested in mining and the blockchain, we began to retailer CMF, allowing different companies in the related fields to share their thoughts and achievements in the industry, and also making this event more open to the public. We're happy to retailer this event once again, to be hosted online as we feel that the industry is changing more and more. Mining first began with a handful of number of miners, and today there are thousands and thousands of miners from each country. In line with these changes, mining technologies and trends have also continued to improve, just like our Antminer products. As of this moment, the price of BTC is well over $60,000. A great milestone which we miners have helped reach over the years. Bitmain hopes to continue to guide the industry and give more miners a better outlook as we move into the future. We'll be joined here today by expert leaders of the industry, and we'll be having 3 main speeches, 2 panel discussions, and don't forget that we'll have the chance to attend, and that attendees will have the chance to ask some questions, so don't forget to put them down in the question section. So I hope all of you are ready, and as we begin our first speech, I'd like to call in Irene Gao, who's the Sales Director of Antminer in North Central South America. So she'll be talking about Antminer in 2021. So we'd like to welcome Irene Gao.
Good morning, everyone. I'm very honored to be here, and thank you for joining our CMF. And I'm happily to sharing something that just happened to Bitmain, something interesting and some good news. So in February, we just moved to new office. Our new headquarters located in SE Park, which gather many excellent enterprises and excellent neighbors. And then we held a 2021 Bitmain Partner Summit in Shenzhen in March. During this summit, we announced global sales strategy and introduced the annual order business model. It's the first time for us to gathering our supply chain partners and clients together. And based on openness, cooperation, and win-win concept, we achieved long-term mutual benefit with more excellent supplier partners and provide a solid guarantee to our customers for long-term investment, especially under the pressure of COVID-19 and the surge in market demands. And Bitmain operates with many supply chain partners to stabilize the production and supply of our mining equipment. The happy things is since 2020, we never delayed any products, and we just deliver all the products to clients on time. During the summit, we announced the annually purchase business model with S19J. It maintains exceptional mining capabilities and displaying advanced power efficiency and cost effectiveness. The annual project sold out quickly, and then we officially launched an annual batch of order of S19J Pro this week. It's starting from August 2021. It may be a good news to some clients because it's the earliest massive production supply of this year. And a client can receive a batch of miner S19J every month for a period of a year. And the hash rate of S19J Pro is high as 100 terahash per second, and boasting a low energy efficiency ratio of 30 J per terahash. And with our higher quality control, the life cycle of the miner is expected to exceed 5 years. And the after-sale service will be a very strong guarantee for long-term investment for all of our clients. And at the global cryptocurrency mining industry and a new stage of development, we will plan to have a variety of services for long-term partners and clients. And we are aiming to respond to market opportunities and challenges to achieve the strategic goal of creating up a win-win partnership. Since 2019, when we first come to US market, we found that the vacancy rate of the mining farm can reach to 50%, but now it's totally different world. I heard from some of our clients, the available capacity of mining farm, the early one will be the December of this year. And we started to collect the as we collect the global mining farm maps to helping clients to find good places with higher efficiency and lower cost across the regions. Now more and more clients come to us and ask for help. It's our responsibilities to assist those clients to find the good places and provide consultancy. And it's still a main task for our team in 2021, which not limited to global distribution of mining resources, analysis of ecological changes, development and sharing of global high quality power resources, and mining from the hosting services providers. So to meet those needs, no matter to seek the compliance listing channels or dispersing regional policy risk, we'll continue working with clients across the region, no matter if from mainland China or from other regions. We will provide the service and help for them. And I'm showing some pictures that we did for clients to advance their maintenance ability. In 2021, our AM Training Academy held 13 on-site maintenance training sessions, and there are more than 100 participants to get a 100% qualification rate. Given the global impact of COVID-19 pandemic, our training also launched online courses in time to help those in need of the maintenance training. So in 2020, 10 online training sessions were launched in China, while around 7 were held overseas, and more than 140 participants were involved over globally. In 2021, our course will continue to upgrade and enrich to meet the diverse need of trainees with more optimized professional guidance and practical experiences. Now the training course, the online training course available is open every month, and it's open for application online. Now, we are working with clients for long-term annually contract. We also offer free training courses to those clients to ensure they can set up their own repair team. at the same time, more repair center will be set up in United States and Canada, and we will keep assist our clients to reach the online rate and to reach our own TAT goal, like TAT 3 days ago. Now we have, you can see on the picture, we have a one repair center authorized and one cooperative repair center. In the future, we're going to open more with our clients who have big mining farm to ensure they can solve the problem on site. And for those very technical one, they can send back to our authorized repair center and get a return very soon. And in Canada, we're going to have 2 cooperative repair center in 2021. And this year, we reconstructed our team to better serve the above goals. Our enthusiastic and professional sales team is committed to understand all clients' requirements and providing with expert advice and work closely with all of our clients. And we will adhere to the principle of openness, cooperation, and win-win partnership. We will also select multiple partners to lead companies' ecology towards success. And we will continuously focus on developing technology and customer-centric strategy to provide customer with more excellent products and diverse services, innovation, and long-term investment guarantees. And I hope we can work closely and to improve the industry level. And the good news, there's a good news for our team that we're going to traveling since May to United States and to meet our friends and clients and sharing what's happened in the different parts of the world. And I believe there will be some interesting topic to share, and there will be a lot of business and opportunities to share across the region as well. We will keep inspiring the development of the industry, and we'll be the bridging from different regions and get the whole mining world together. Thank you.
Okay, thank you, Irene. So I think we could give, like, if anyone has any questions about Bitmain or Antminer, because of course Irene was also discussing, like, we're making a lot of developments overseas, especially in North America. Then you could just send us your questions and we could answer it as you go throughout the event. So I'd like to thank you again, Irene. Thanks for the wonderful speech. Thanks for sharing what Bitmain has planned for the North American region and for the year ahead. So for our next speaker, we're going to be calling on someone from Antpool. He's a North American operations manager for Antpool. So he's going to be sharing us today Antpool mining development from last year to this year to what we're going to see in the future. So welcome, Eric.
Okay, thank you, Justin. Thanks you guys so much for joining us. I'm so proud to be here to share some of my views with you guys. I'd like to introduce myself first. I'm Eric. I've been working in Antpool for almost 4 years. I'm mainly responsible for the North American market. In 2019, my colleagues and me, we spent almost half a year visiting many facilities and communicating with our clients in the North America. There's no doubt that it's a very valuable experience for us. We can understand our clients needs more the past year has been a very dramatic and challenging year for all of us. We have experienced many unexpected things. The mining industry has also undergone great changes in the recent years. Uh, in the very beginning, from the very beginning, everyone didn't have much concept of hash rate and mining pool, and people didn't actually need a mining pool to start mining, and many mining pools were not very standardized and small in scale. From the perspective of the composition of the clients base from the very beginning, idealists and the gigs. Now more and more customers with professional backgrounds have joined the industry. During the development and change of the mining pool, the pool fees has also undergone great changes from the previous 8% to 4% to 2.5%, even 0% for a while. And back to regular pool fees now. From the very beginning, most hash rate were concentrated in China. And there is more and more signs that more and more hash rate is gathering in North America. And the North American market has always been the very, very important to us. The percentage of hash rate in North America has risen very rapidly from 5% 3 years ago to a maximum of about 23% now. Thanks for the further growth of customers in the North America. We firmly believe that the percentage will continue to expand. Other than that, now we also attach great importance to the accuracy and the transparency of the data. The needs of clients have become more refined and professional. More and more listed company have joined this industry. In order to meet the needs of these enterprise clients, we send daily mining reports to them every day, and we assisted them to in auditing the earnings they received from our pool when they need it. And actually, we are already doing this. We have assisted many companies to confirm their pool earnings, and many of them are also participating in this online conference. Okay, let's talk about Antpool. All of you guys know Antpool is the largest mined cryptocurrency mining pool in the world. As a leading cryptocurrency mining platform, Antpool has already received lots of user support and trust through user-friendly interface, safe and stable performance, efficient and intimate service since it was online in August 2014. Antpool, leading the world for a long time in hash rate, has always been the preferred mining pool for all of users. Since Antpool was founded in 2014, our mining service has almost covered the global users from Asia to Europe, North America, and South America. We ensure our clients that mining in Antpool is the most profitable choice among all the mainstream mining pools. We also developed many software for our users to make it more easier to manage their mining facility. And as an advanced mining pool, we support almost 20 coins. We'd like to provide technical support for our clients if you need assistance in mining operations, and if you host or would like to host cloud mining business, you can choose to be our cooperator mining pool. and we have advanced solution for you. Okay, that's all I like to share today, and please feel free to contact me if you have any need for mining purchasing or mining pool operations. We would like to provide you guys with a one-stop service, and we'll try our best to bring you the best mining experience. Thanks. Back to you, Justin. Thank you.
All right, thanks, Eric. So I think like for mining pools, like we could see the updates also. I think Eric was able to share like some of their new features, what Antpool could provide. You know, I think this like Antpool is known for being like one of the world's best mining pools. So I think if there anyone interested in this, then you could feel free to contact Eric, or of course you could leave messages also, and he could chat with you here in the Q&A session. So thanks again, Eric. So I'd like to introduce Mike Collier. He's the CEO of Foundry, a wholly owned subsidiary of DCG. So Mike has been in the mining space for over 4 years, having worked closely with Bitmain during this time. Having worked at both small and large scale mining facilities, Mike will share with you how he entered the industry and his path to Foundry. So please join me in welcoming Mike Collier. Hey, Mike.
Daniel, thank you very much. Excited to be here. I didn't prepare any fancy slides, so you're just gonna have to listen to me for a few minutes. I think it's great you guys are doing this and bringing the industry together. So I'll tell you a little bit about my background and kind of my journey, and then a couple topics you guys asked me to touch on. So, you know, I think everybody's got their own interesting story on how they discovered Bitcoin. You know, mine started back in June 2017 when after 20 long years, I kind of took a break from my traditional career, and I started doing a deep dive around blockchain technology. And it reminded me very much of the early internet days, which I was in college at the time. And it just felt like the internet was going to change the world. And as I learned more about blockchain, realized that this had the potential to do the same. And so I, basically had to teach myself, which I think all of us have had to do, spending 15 plus hours a day just diving into this world and learning more about it. And quite honestly, I fell in love with the mining space, and I felt like we had to build out the infrastructure first. So I had a chance to join a small company called Savage. At the time, we grew it from like 1 megawatt to 3 megawatts, which just seemed like the biggest deal back then. And then I knew the guys that started Core, and they asked me to join them. And they had built like 25 megawatts, which I was blown away. And then we grew that to over 100 megawatts, and I think they're still going. And then I got a call from Barry Silbert, who is the founder of the Digital Currency Group. And in October of 2019, Barry asked me to lead up Foundry. And he said, look, let's build a business for the long term. Think in terms of decades, not months. And he basically gave me a white sheet of paper and said, figure out how we leverage the DCG balance sheet, the brand, the portfolio companies to meet the demand for these new institutional investors. And how do we help drive efficiencies and transparency in this crypto mining space? So the first thing we decided to do was provide equipment financing to these institutional sized miners. Second, we worked very closely with the machine manufacturers to for these machines in advance, kind of like get to the front of the line. And in this way, we've kind of helped both parties plan and grow their businesses. And I'm very proud to say that we've built a very strong, deep working relationship with Bitmain over the last several years, and it's been fantastic, their support for North America. So we also provide advisory services to miners, and then we've launched our own North American-based mining pool, where we guarantee FPPS payouts with low fees and a full transparency. And we believe it's very important to have a large, stable pool in the US. Another interesting part of our business is our staking business. So we are actively staking on over 20 protocols. It's a really interesting part of the business that I'm learning more and more about every day. We're seeing tremendous growth on that side. And then by the end of this month, I think we're going to have a little over 30 employees, which is by far my favorite part of the job. I mean, giving people a place to pursue their passion it's been amazing, absolutely amazing. So a couple topics that Bitmain asked me to speak about. One is around this idea of shortage of machines. We're constantly hearing and reading in the news about this global chip shortage. So much of our life revolves around these chips, right? The cars we drive, the Zoom calls, streaming Netflix, Uber, even crypto Twitter. And as this demand increases, so does a desire for faster speeds. And I think the chip makers have been in a race against time to make chips that are more efficient and how to pack all that efficiency into less space. Some people have said, "Oh, is Moore's law dead?" I was cracking up yesterday. In 2019, the NVIDIA CEO declared Moore's law is dead. He said it's now more expensive and it's technically more difficult to double the transistors. And then yesterday in the Wall Street Journal, NVIDIA announced plans for a new chip to compete with Intel. And they said it's the first processor for data centers, and it would operate 10 times faster than the Intel chips. So I don't think Moore's law is dead. I think what's going on is with the Bitcoin mining, I think we've been playing catch up to the rest of the world over the last 5 years. So early on, one of the most devastating parts of mining was buying a machine, and by the time you got it and plugged it in, a more powerful machine had been launched, which then you just got wiped out. And it seemed like a new generation of ASIC machines were coming out every 3 to 6 months. And I think what's basically happened is manufacturers like Bitmain have been at the forefront of cutting edge chip design, and they've worked very hard to catch up. With the latest machines, they've more than doubled the efficiency. We've seen a 6x increase in hash rate on these machines, but now they're competing with Apple and Samsung for capacity, which is something new. And machine capacity is very tight, and I think it's going to continue for the foreseeable future. I mean, literally everybody in the world is looking for the latest Bitcoin mining machines. So I'd like to shift focus and talk a little bit about the role of institutional miners. I'd say, you really want to know why people are having a hard time getting machines. It's because institutions have arrived. I mean, I can hardly keep up with the news every day of new Bitcoin mining companies. It's just been crazy. I've always thought the US would be a leader in Bitcoin mining, and we did get off to a bit of a slow start back in 2016 and 17, but there were many companies with their heads down building for the future. And I will say one thing that makes the US special is the access to capital markets. Because of that, we felt that we would see substantial growth in the hash rate in North America. And at Foundry, we started buying machines in the first quarter of 2020 with a bet that the S17 or S19 class of machines, kind of that under 40 joules per terahash, would be the premier mining machines going forward. And our goal was to help grow the mining ecosystem in North America. I'm happy to report that we've deployed over $225 million into the North American mining space, either through our own mining or through providing equipment financing to other miners. So we wanted to help miners get to the front of the line and upgrade their machines. And we've worked really hard to make that happen. It's been amazing what has transpired over the last 12 months. The last time we looked at the North American mining space, companies and the publicly traded companies had over $20 billion of market capitalization. And even more crazy is the huge list of companies that are planning to go public over the next 6 months. I definitely think we're in exciting times. And I think Bitmain was early to recognize this, and they've been a great partner for the North American miners. So what's next? Nation states and energy companies are starting to wake up to the opportunity that's in front of them. You know, I think large energy companies are starting to investigate Bitcoin mining. And I think they'll start with some small experimentation. And then in the next cycle, they're going to deploy large amounts of capital. And it's not only going to grow the Bitcoin network, but it's also going to improve their own energy operations. You know, Bitcoin mining will be a great stabilizer for the grid. And we've even seen examples of this at peaker plants like Greenwich in Western New York. I also think, you know, Bitcoin mining becomes a bridge between the current energy production and a world where 100% of our energy is produced from renewables. I think it's going to be a 10 to 20 year journey, but Bitcoin mining will be an important component to it. You know, today's battery technology is just not good enough to bridge that gap. And Bitcoin mining provides a steady base load and yet is still intermittent to allow grid stability. And this creates a really powerful economic dynamic for renewable energy products. And I think exciting times are ahead in that field. You know, nation states, they can't sleep on this. And they're going to find ways to take advantage of their natural resources to be involved in Bitcoin mining. I mean, everybody from Belarus to Iran to Middle Eastern countries, even Kentucky, they've now passed laws to attract miners. So a shout out to all the Kentucky miners out there. Great job. I do think at some point, you know, Bitcoin mining will look like a utility, and it's going to be part of critical infrastructure for countries. You know, every country has a strategy around oil, energy, information, and they're going to need a strategy around Bitcoin mining. And having a strategy will give them long-term advantages. Over the last 100 years, you know, everybody was focused on oil, and we've even fought many wars over the access to oil. I think the next 100 years is all going to be around access to silicon wafers. And nation states are plotting right now on how they're going to keep control of their supply. And I think Bitcoin mining will be an important part of this semiconductor race among nations. You know, we believe nation states, energy companies, sovereign wealth funds are all going to be the new players in the next wave of Bitcoin mining. We also believe wafer capacity issues are going to continue to grow and be an issue for this industry. And as crazy as it sounds, I think Bitcoin mining will be a bridge to 100% renewable energy production. So in conclusion, you know, the future is very bright for our industry, and together we're empowering decentralized infrastructure that's going to change the world. So it's exciting times. I'm glad to be here and happy to take any questions on these topics or others.
Thanks, Mike. Actually, I just sent a message in the Q&A discussion. So I think some people could leave their answers over there. I think some people be typing now. Then I could just read it to you in a bit. Let's see. So if there's anyone who wants to ask some questions to Mike, you could type it down in the Q&A section, and then we could read it out to him later. Then he could answer the questions. Let's see.
So one question I think it just came in was around government regulators and how it will impact mining. I think you know, I think in the United States, it's a very stable environment from a mining perspective. I mean, in the early days, there were some, you know, miners that I think pushed the bounds and it kind of scared local communities. But for the most part, what we're seeing is the local communities are recognizing the opportunity for job growth and for bringing new industries into the space, into their communities. So it's been more, I think miners have drifted towards all of the places where the local folks are excited to have them be part of the business. I see another question is the ability to lower MOQs for long-term customers. I think this is an issue right now. We're trying to think through how we can address that. It's not real straightforward, especially as, you know, Bitmain and others are requiring, you know, long-term commitments. You really need, it's hard to match the customer with those long-term commitments.
Mike, I think there's another question here saying, could you please describe, oh, okay, your equipment financing model in more detail?
I mean, if you're interested in that, feel free to send a request through our website, and we'll get back to you. But we basically are trying to help miners upgrade their equipment. So we provide either 12 or 18-month loans. We let the machines essentially pay for themselves. We provide the capital up front to essentially get in line to get your equipment at a later date. See, another question here is, do we run our own mining farms? We actually don't. We have our equipment spread out in about 15 different locations around North America. We've tried to partner with kind of the best and brightest in the space, and it's been fantastic. We've chosen to go down this path just because we felt like there were a lot of players in North America that were well positioned to own the kind of the hosting space, and felt like we'd rather support them and help them grow their businesses than compete with them. So it's been a great partnership, and it's worked really well. So do I think that there's going to be some crypto that's going to change proof of work to proof of S, and will it still be profitable to mine? Look, Bitcoin is the king, and it will always be proof of work, and there will always be need for that critical decentralized infrastructure. I think Ethereum is going through that process right now to make the switch from proof of work to proof of stake. We hosted nodes in the Ethereum 2.0 Genesis block. Still looking to grow that part of the business. So I think, I don't know, is Apple the only one with a phone? No. So there's always going to be competition, but I think proof of work is especially for Bitcoin, will be here for the long term. We get this question a lot. We typically don't, around investing in startups. We typically don't invest in mining startup companies. So we just help provide equipment financing for them to get machines. Let's see here. I'm just assuming let's see. Do you foresee miners directly selling BTC futures? That's an interesting part of where I think the industry evolves. Our sister company Genesis has a very large derivatives platform. They lend against crypto. They provide liquidation services. So we do think like treasury management for Bitcoin miners is going to be very important in the future. I always say Bitcoin miners are really good at producing Bitcoin. I would say I know I struggled with producing money with the Bitcoin that I've produced, right? And that's some of the services we are offering to miners now. In the fall, we were doing some trading of derivatives on our Bitcoin mining, so selling future call positions, which was really interesting, and it was kind of, I'd say it was juicing our returns on mining, and then the price of Bitcoin just went on a run. So we've kind of held back on that, and now it's more of a switching a strategy of mining and holding, and then earning yield on those Bitcoin. So you can get 4 to 5% yield on Bitcoin that you're mining and holding, and I think that's something that more miners should be taking advantage of. What's the benefit of taking a loan from Foundry versus taking one from a bank? I would say if you can get a loan from a bank, you should take that all day long, which we're hoping someday more bigger banks will get into the business of lending money to miners, and I think that would be fantastic for the industry. Right now, banks want nothing to do with the mining space, it seems like. So it's very hard to get financing for miners today from traditional banks. So let's see, miner prices are high now, or much higher now than 3 to 4 months ago. But looking forward long term, still better to buy miners now and get BTC rewards than wait 4 to 6 months to buy cheaper miners. You know, this is the toughest part, I think, about mining is when to buy your miner. So it's a tough question, right? So it's like this time last year when we were buying machines, there was nobody that wanted to buy machines. We didn't even have people that wanted to do financing with us because they said mining economics were horrible. And then mining economics turned positive. And by the time it turned positive, there was no more machines to buy. So I think if you can buy machines now, it's a good time to get the machines. The pricing may seem high today, but you know, you're kind of betting on what the mining economics are going to look like over the next 12 to 18 months. I think these machines today are going to last 4 to 5 years, and maybe even longer. It shocks me that the S9 can still mine profitably. I really thought they were all done, you know, at the halving. So I think, you know, the latest generation, the S19s, I think they're going to be around for a long time. So it's a long-term bet on the space. And, you know, the question is, you know, where do you think Bitcoin price is going to go and hash rate over time? What's the biggest risk you see on the horizon for the mining industry? You know, I think the risk is it depends on where you're positioned, right? So if you're a new miner or you need to upgrade your equipment, the biggest risk you have is getting machines over the next 12 months. You know, I think if you have machines and they're installed, the biggest risk is what happens to price and or difficulty over the long term. Just reading through the questions here. I don't know, Daniel, if you see any.
I think we could do maybe 1 or 2 more questions, and then I don't know if there's still more questions to answer. Then we could skip to the next part because we're going over time.
Oh, you're over time. Okay, let's call it a wrap then. Right now, how's that? It was great.
Perfect. All right, thanks,
Great
Mike.
to talk to everybody. Yep.
Yeah. So everyone, if you guys want to contact Mike, I guess you could reach them through their website, and then you could send your questions over there.
Yeah.
Yeah. So Mike, thanks again. Always fun having you here. You always give
thank you.
answers. Okay. So thanks everyone for keeping staying in touch with the video and then listening to all our speakers. So I think we're reaching kind of like our halftime point because we finished the 3 main speakers. And we're going to be moving on towards the 2 panel discussions. So before we also move to the first panel discussion, I just want to make a short announcement that if you guys enjoyed this first CMF, North America, we're also going to be preparing one that's dedicated for Europe. So now we're getting most of our speakers from North America talking about the industry in this side of the world. So now I think after a month or 2 months, we're going to be preparing another CMF. So if you're also interested in listening to that, then just keep in touch with Bitmain, then follow our Twitter, Facebook feeds, and we're going to be announcing that soon. So moving forward then, I'm going to be calling on the first panel discussion. It's going to be about the state of mining in 2021. So we're going to have some panelists joining us. I'd like to call on Tim Kelly. He's the CEO of BitUda. Russell Kan, the Chief Customer Success Officer of Core Scientific. Greg Onishan, the Chief Mining Officer of GridEdge. And Cully Cavness, the President and Co-Founder of Crusoe Energy. And Dave Perel, Co-Founder and CEO of Compute North. So welcome, guys. Is everyone here? Cool.
Great to be here.
All right.
Great to be here.
Cool. So I'll leave it to you guys then. You can take over, Tim.
Oh, thank you, Nathaniel. Well, first of all, I'm very honored to be here and want to thank Bitmain for putting this together. just for as far as introductions, my name's Tim Kelly, founder of Biduda. We're a blockchain technology digital asset brokerage company with a big focus on mining. And why don't I turn it over to Russell? Why don't you start us out? Let's just get the introductions going, because we do have a fair amount of topics to cover. Sorry.
Thanks, Tim. Russell Can. I'm with Core Scientific. I'm the Chief Customer Success Officer. So I work with our hosting clients in North America. So, and well, throughout the world, actually. I've been with Core since the beginning, and I've been in the mining business only a little bit before that. So, thanks.
Cully, do you want to go next, please?
Sure, yeah, happy to do it. And my co-founder Chase is also here. Chase's wife is due to give birth any day now, so we weren't sure if he was going to be able to be our speaker, and so I substituted in here. But the baby's still inside mama, so we've got both of us, and
Okay,
you'll be happier to hear from Chase than me. But my background is really in the energy industry, both in renewable power generation as well as upstream oil and gas. Crusoe Energy Systems captures flaring natural gas and otherwise wasted energy to power mobile modular data centers, primarily Bitcoin mining, but also some other types of computing. And we're at about 40 megawatts now, all from flare gas. And we're scaling towards about 100 megawatts by the end of this year is our target. And we do a combination of self-mining and now some hosting. In just kind of the last few months, we've started doing some hosting projects as well.
Cully, thanks for that. Chase, did you want to add anything? I saw the, I thought you were literally headed to the hospital anymore.
No baby yet.
I didn't realize you were right, but we're thrilled to have you. So
With me and Cully here today. I thought he did a great job introducing it, but we founded Crusoe together about 3 years ago. Before that, I was in the digital asset and cryptocurrency space as an early partner at a hedge fund called Polychain Capital, which is one of the largest institutional investors in the space. So that's my background.
Great. Greg, why don't you introduce Greenwich and yourself? And I gotta get one on this.
Yeah, gotta come visit the plant. So my name is Greg Onessian. I'm the Chief Mining Officer at Greenwich Generation. We're located in Dresden, New York. I started mining Litecoin and Bitcoin in 2012 as a home hobbyist miner. Since then, I've worked with many companies, either directly or on a consulting basis in various areas, including hardware repair, software development, staff training, and facility design, as well as hardware procurement over the last 4 years. I was also past speaker at Bitmain's CMF event in Miami back in 2018. And I appreciate being invited back now in 2012 on behalf of Greenwich Generation. We are North America's first vertically integrated mining operation with a wholly owned power plant. I've been working with Greenwich for the past 2 years as a consultant, and I'm very excited to be an integral part of the executive team.
Greg, thanks for that. And Dave, last but not least, if you could tell us a little bit about yourself.
And as a father of 3, I'll say, Chase, you made the right call by being very conservative about being with your wife. So smart move. So great to see everybody. Dave Perrell, CEO, co-founder of Compute North. We're a service provider to the crypto tier 0 computing space. 3 sites under management: Nebraska, Texas, South Dakota, 2 other sites that we have under management. We work to differentiate ourselves by being very trusted and credible, moving at the speed of crypto, and the team on this panel knows what that means, and driving to low cost and affordability for all of our customers. So I got in the sector. You guys will appreciate this. Being from Minneapolis, it can get a little bit cold throughout the winter. My wife was complaining about our garage and the kids being too cold to get in the cars, so I bought a bunch of miners and started placing them in the garage as heaters. And that was the start of the story, and it's been a fun evolution. Great to see everybody.
Dave, thanks. Well, guys, we have a lot of ground to cover today as we're making all-time highs in Bitcoin as we're all watching this. So we should definitely run this back next week, just to give a shout out to Bitmain. But wanted to just throw this out, guys, and please just dive in. Thinking about the current state of mining and compared to previous years, would love to get thoughts. And please, whoever wants to take that first, and then we just, you know.
Yeah, I don't mind going first. So I believe what we're going to see over the next few years is, you know, more institutional players. As mining continues to become more difficult than it ever has been before, only those players who have lean operations and the latest generation hardware with a focus on process excellence and long-term stability are able to build and break even on industrial scale operations. This has made more room for institutions to either start mining or invest in mining. I think there's no more room for mining cowboys. You know, previously it was like the Wild West. Many mining cowboys, most of whom happen to be based in China, were mining a lot of Bitcoins in a very short time with little regard for sustainability or the long-term sustainability of the operations.
I'm going to add a little bit to what Greg said there. I think that a lot of miners that are getting into mining right now, the institutional players, large and small, I think we're going to see more miners that are mining to acquire Bitcoin at below spot. And so instead of mining Bitcoin to then sell it, I think we're going to see a lot of miners that are mining Bitcoin to hold it, and they're using mining as an alternative to just buying it on the spot market, especially in North America. You're seeing that with big pubcos. We're seeing that with a lot of the hosting clients. We have exposure to hosting clients that are hedge funds, family offices, public companies, that kind of stuff. So instead of mining to sell the Bitcoin, a lot of miners, and I think you're going to see a lot of this going forward, are mining to hold the Bitcoin as an acquisition play.
Yeah, great question, Tim, and thanks for hosting. A lot of great familiar faces here, so good to be on the panel. I would agree with Greg. I think the transition to greater institutionalization of mining, I think, is definitely a trend to watch. I think along those lines, I think you're also seeing increased decentralization. So mining, in the early years, I think was heavily concentrated in China and in Asia. I think you're seeing a lot of transition to other markets where where there's large scale access to low cost power. And then the third major trend that I see unfolding is sort of the larger financialization happening in the space. I mean, you have people like Mike who presented earlier that are adding increased unique ways to finance the industry from debt financing and credit facilities. And then you also have a lot of these publicly traded miners that have access to institutional public market capital that they can sort of deploy into the space. So I think between those things and then sophistication around hedging, risk management, and I think one thing that people have to be wary of is debt kind of cuts both ways, right? So if you lever up your business and then you see a downturn and you're not hedged, that's how a lot of historical physical commodity producers have gone out of business. And I think as the derivative markets evolve, groups like your firm BitUda, I think serve a much needed service within the marketplace to basically flatten out and create more predictable revenue streams for institutional scale miners.
Yeah, I would just add on to what Chase just said that, sorry, Dave, you want to go ahead?
No, go ahead. I'll follow up.
I was just going to make that one comment, which is sort of a cautionary tale from the energy industry. And that is the rise of environmental concerns around mining. And I think that it's naive to dismiss this like it's just noise or it's going to go away. I really, I did like the comments in the last session that this can be a bridge to 100% renewable power over the next 10 to 20 years. I think as an industry, we need to really start thinking that way because I can promise you that I've seen this all play out before in the energy industry. And the operators that didn't take the ESG criticism seriously and thought they could kind of, ignore that, they've really, in a lot of ways, lost their social license to operate in many jurisdictions. And, I'm here in Denver, Colorado. The oil industry is regulated in a way that makes it, very challenging to to operate here. And it's because the industry did not listen to criticisms from metropolitan areas and environmentalists. And, at this point, capital isn't really attracted to Colorado for a destination for upstream oil and gas activity. And I think if we get this right as an industry, we can be celebrated as energy innovators. And exactly to Mike's points, we can be helping to stabilize the grid, provide additional economics to stranded renewables. In the case of Crusoe, we're producing carbon negative Bitcoin. We're reducing methane emissions. Flaring does not fully combust methane. Methane is a very potent greenhouse gas, and our generators do achieve 99.9% combustion of the methane. And so relative to ongoing flaring, we see that as like a real environmental win. And there are certainly other operators that are, that are definitely, taking this environmental or renewable oriented sourcing of power approach. I think that they're going to be, sort of rewarded for that. And eventually it could become, I would think, a requirement of some kind, whether it's social license to operate or regulatory or how that actually comes to be implemented. I'm not sure, but I've seen this story unfold before in the energy industry. And you really want to be on the right side of it, and the right side of history. And we look back in 20 years, I'm sure this is going to matter, and we all need to start thinking about it now.
Cully, I'll add on to that. I think you're exactly right. So, my co-founder, PJ Lee, has been in the renewable sector for 27 years and the development side. So he's got the standpoint of history like you do. And I see really three mega trends that I've kind of considered to what's going on. I think the scale and industrialization of the section, the entire sector, certainly happened. Mike talked about this in his speech about just, when 1 or 2 megawatt was a lot. We're talking now clients with large balance sheets, large scale, looking to deploy hundreds of megawatts at a time. It's just a totally different ball game, and I think creates a different type of client. Secondly, I'll say the good guys are winning, and I'll say just by the reputation and just the familiar faces on this panel, I think there's really now been a credence for professionalism, for folks that are trustworthy and credible. And again, I'll just, showcase just a lot of the members that have met on this team. 4 years ago, there was a lot of lack of trust and a lot of lack of, people you could go to and knew were going to get the job done. That's certainly changed, I think, as the sector has matured. And then last, I just think is that the ESG, renewable, do the right thing. And that can be, what's going on with OFAC and KYC and AML. It can be on the renewable side of how does this go about. I think to exactly what Cully pointed out, there's going to be more distributed compute along with distributed generation. If you kind of think the way that renewables are going, it's going to be much more distributed energy at a much wider scale at lower volumes. And I think compute, not just Bitcoin and crypto and mining, but compute in general is going to have to follow that same trajectory. And we're looking to obviously be on the forefront of that. And I think that's going to be really the angle that's going to play out over the course of the next several years, because we certainly want to control that narrative before regulators or the government or someone else at a higher power does so.
Guys, all great points. We at Bithuda could not agree more with the work that Crusoe is doing and some of the points that are made here. When Cully talks about the full burn, it's a lot of people neglect that, but that's really exciting to us. And ESG, and as Mike alluded to in his discussion about the bridge to renewables, we think about this catalyst to renewables. But it's great that to really be a part of this. But we do. Maybe I should just, before we move on, anything else that anyone would like to add before we move to our next topic, which I'm really excited about, but just want to make sure before we move on. Guys, this is going to be interesting. I'm very excited to hear what your thoughts are on this. Is predictions leading in to 2022 in Bitcoin mining. Very excited to hear people's thoughts on this one.
I mean, my personal opinion is I think it's going to be continuing to push for more institutionalized investment. The game is just getting bigger and bigger. Like, as everybody mentioned, the dollar amounts getting invested are getting bigger and bigger. The power demands are getting bigger and bigger. I think it's just going to keep moving in that direction. And I do believe that, it's going to have to catch up to, what they said earlier. We're kind of behind. We were always behind the curve in technology. getting the older generation wafers. I think now we're going to have to focus more on things like liquid cooling and using the latest generations of equipment. I just think it's the industry is catching more up to what the traditional data center businesses are doing.
Greg, just a question. I just wanted to dive right in on immersion. Do you think that's a powerful trend leading into 22, or is it a little further out, you think, or just wanted to get your thoughts there?
I still think it's a little bit further out. There's, obviously there's a large CapEx to building out immersion solutions. I think the technology is still a little bit cost prohibitive. I do think there are some intermediary gaps that we might be able to fill. I mean, Bitmain has mentioned their AntRack product in some press releases in the past. I know I've been talking to them about something like that for the last 3 years. So I think that's definitely a step in the right direction. Historically in the past, they have made some, prototype liquid cooled miners, the S9 Hydro, and before that there was a miner called the C1. I always bought those miners, intrigued by the idea of liquid cooling. And I think that's probably a good first step, with a lower CapEx cost than going with full immersion.
Tim, I'll add, we've been looking at what's going on in the immersion sector for quite a while, and we see the same trajectory of what's happened into the rest of the compute. I think what Bitcoin mining and the sector has done in general has just showed that the cost of computing can be dramatically lower than we're used to. And I'll use the example of what's going on with hyperscalers and tier 4 data centers. They simply can't afford, you can't host a Bitcoin miner in a tier 4 data center. It just simply doesn't make sense, right? The economics don't work. And what has been done is the question has been asked why a lot by our industry to really get to the price point of where we are today and do a lot of value engineering. We're seeing the same thing happen with the immersion cooling. What traditionally was available for supercomputing is now starting to make its way into mining. And I'm always humbled by just some of the smart, just really, really, really interesting folks that are doing some really unique elements in this. And I think we're starting to see some, what I'd consider pet projects, get to the point where they can start to be scalable. And I think we'll see that over the course of the next 18 months. And I think immersion gives you really three options. One is obviously some of the overclocking is really interesting and the ability to have additional performance. Two, the longevity of the machines. To Mike Coyler's previous comments about some of the lack of chips and those kind of things, I think making the machines last longer has a lot of compelling options. And three, to my point earlier of distributed compute going along with distributed generation, a lot of times the best producing power projects or power areas, particularly for renewables, are the places that are the harshest climates where nobody is. And it's hard to do air cooling. Think about, West Texas is the perfect example, case 1A. But I'll tell you, when I co-founded, Compute North originally, it was PJ had a solar plant in the Atacama Desert in Chile. And we simply couldn't make the cooling work in today's environment. Now, immersion solves those kind of things. And those are the types of environments, large generation, large scale solar, wind, or those types of projects. And if you can run in that, I think things get really, really interesting really quickly. So we're excited to, be on the forefront of that. And again, with a lot of our partners here on the conference and on the webinar today, are excited to crack that code here, which I think will be in the next, 6 to 12 months.
So I'm going to reiterate some stuff, and I like going after Dave because I can just kind of say, yeah, I agree. So I think seriously, I do think going into 2022 and 2023, we're going to see more distributed Bitcoin network around the globe. We're seeing a lot of the growth happening in North America right now. We're going to continue to see that. And I think that's good for the Bitcoin network. I think having a strong network in China and Southeast Asia, having a strong network in North America, Europe, and Central Asia, I think it's just good overall for the whole network to be distributed. Right now, we're trying to grow it. This is a North American conference, so we're trying to grow in North America. We want to get to 25, 30% of the total network. And there's a couple things going to help with that. First off, as we talked about before, the cost of power. We are driving power down, and it's driving towards renewables because there's no cheaper power on the planet than renewables because it's got a free input source. It's also driving grid stability. We saw that in Texas with the winter storm warning, or excuse me, the winter freeze that froze out the state of Texas for a week. Bitcoin miners or crypto miners were used as grid stability, and I think we're going to see more of that trend going forward. So, and what I mean by that is you can have a 100 megawatt crypto mine that uses the full production of a power plant on the grid. And then if something happens and there's an emergency situation, you can turn off that 100 megawatt crypto farm without killing anybody, and you can add that power to the network to heat homes in Texas in a big freeze. So I think you're going to see a lot of the power industry looking at the crypto industry in a positive way, not a negative way, in a way to say, okay, how can we use crypto to stabilize the grid? How can we use crypto to stabilize renewables? Because we are a 24/7, 365 load, that's a very unique animal for industry folks. And those in the industry will tell you that we're a unique animal for that. So I think as far as trends go from the power side, that's what we're going to see. I think Greg mentioned this. We're already seeing this with Core. You guys know we're a large provider in North America. So we're seeing mostly institutional hedge fund, public companies, family offices getting into this space. And I'm not saying there's no room for small miners. I myself have GPUs sitting in my office, but for Bitcoin mining, it's much easier. Even if you only own a few miners, it's much easier for you to call up Dave at Compute North or call up Core, someone like that has these large, or any of the guys on this panel that has these large farms, because even with our hosting costs, it's going to be cheaper than you can do it in your garage. So I do think from a institutional investment perspective, you're going to see large scale miners building large infrastructure because there's economies of scale there. And I do think Mike Collier put a very fine point on it as far as silicon goes. I think looking forward into 2022 and 2023, the whole world is going to be focusing on silicon right now. And we're a big part of that. Our industry is a big part of that because we use silicon. And I think you're going to see that the whole world is going to have to focus on that. Where do we fit in that silicon? Where do we fit with, this? And of course, I'm not talking about the stuff where Ford says they're lacking silicon, because that's a very different size chip to turn on your cruise control versus what we use in our business. But I think silicon is going to be the driver in our industry. Past couple of years, I thought it was power. I think at least in North America, folks have figured out, okay, we got to have inexpensive power. We need to have, because of the environmental concerns, we need to have renewable powers, our way to renewable powers. But I think the issues for growth that people are going to have to be concerned with going forward is going to be silicon. How do we get silicon? How do the manufacturers get it? Where do they stand in line? And then, of course, and Collier touched on this, I think some other guys did too, and that is that this generation of machines, I think, is going to last longer, because there's a big difference there's not a big difference as far as your efficiency goes between like a 14 nanometer chip and a 7 nanometer chip as just between a 7 and a 5 or a 5 and a 3. So I think from a long-term planning perspective, folks are going to have to plan for that kind of stuff. So that's just some of the stuff I see going into the future.
Russell, thanks for that. Always great points. When we get to speak. But would love to hear from Team Crusoe, Chase, Cully. Love to get predictions as we go into the next year.
Yeah, I touched on this earlier, but I think the trend of increased financialization of the space between what Mike and others are doing on the credit side, what you guys and Luxor's doing around the commoditization of hash rate as an asset class. And sort of, being able to manage and hedge those risks. Another big aspect I kind of see unfolding is that I think, just what it means to have low cost power. I feel like the game has just changed, like over the last 5 years. I mean, I think at one point, 5 or 6 cents per kilowatt hour was like a competitive price for power. I don't even think that's like table stakes at this point, right? So you really need to find ultra low cost power, and Bitcoin's a super efficient vehicle for basically incentivizing that seeking for low cost power. So those are the two big trends that I'll kind of touch on. Coley, I don't know if you have anything to add.
I think a lot of really great points have been made. Maybe I'll just say something that's maybe obvious, but I would expect network hash rate to really expand a lot over the next 12 to 24 months as, you can just see the press releases of people ordering 10, 20, 30, 40,000 units. and that's all coming. It will be installed, and we're going to see the sort of exahash pile up as a result of that. So, in the back of all of our minds, it's this is it's an industry that goes through peaks and troughs, and right now we're certainly enjoying like a very extra wide margin moment in history, but I don't think you can sort of plan your business around this kind of economics long term. There's going to be a reversion to the mean in terms of margins and competitive forces. So I think probably a lot of people are aware of that, but it's just something that we're going to monitor, and we'll just kind of see how quickly that unfolds.
Guys,
it definitely leads you towards low cost power. I think at the end of the day, to Chase's point, that's why it all comes back to the cost of power at the end.
Yep. No, thanks for that, Cully. Well, guys, why don't we move on just to be mindful of time? Another question we had, a topic that we want to discuss is how are you optimizing your current operations to maximize full profits, and strategies that you might be employing, whatever you might want to share if it's non-proprietary. Dave, why don't you start us on that one?
Sure, absolutely. So some of the things we've already talked about the development around the immersion and some of those products. Software has become very important. I think just automating what you can, avoiding manual interaction, and that really gets into also scale. So, Russell talked about this a little bit, but just the size and scale of this, just if you can take those costs and spread them out, hundreds of megawatts, or, we're going to start getting to the gigawatt, which is going to be crazy. But starting to talk about those kinds of scale, and obviously the more you can take those fixed costs and spread them, the more efficient you can be. The best part I love about this industry and this sector and just how it's changed even in the last 5 years is just partnerships. And I'll just, to this panel, we've had some great team members and folks that really look at this industry as we're all in this together. I mean, mining inherently is competitive, but it's been just amazing to me how many folks have reached out, have lent a hand, have always been open to experiences, and we've always tried to pay that forward at Compute North. And I'll just say we have just some amazing partners just throughout the sector. Some on this panel today, Bitmain's been one of those, and that's been just a paramount to our success, and we expect to continue forward. So we're always learning and always looking for new ways to innovate and move the ball forward.
Dave, that's a great point that often gets neglected, is about the collaboration. And it just in some of the products that we've been working on and trying to develop, and it's been, I mean, probably a dozen different firms have added value, buy side, sell side, Bitmain, et cetera, and some of the stuff. So I think that often gets overlooked, but that's what's super cool, is seeing when people can come together and firms can really collaborate on that. But yeah, no, it's a great, not to be overlooked.
I'll add to that, Tim. When someone says, "Who's your competitor?" I say the Bitcoin network. Really, when you look at us as an industry, it's not like we're competing with each other. You're competing for a share of the Bitcoin network. If you're in the Bitcoin space or whatever cryptocurrency you're into, you're just trying to get your share of that. So it's a great space to be in. Some of the things you asked about optimization, current operation. I want to reiterate again. It's great going after Dave. Software. We use software to help. Not just uptime and automate as much uptime as possible, but also longevity of these machines. You want to keep your machines alive as long as possible. So it's great to have, software that pings you if a machine's not acting right or doing something wrong, because it's real easy to burn these things up. So we use software. And then as far as, optimizations goes, we touched on it, and you guys have been talking about immersion. I really see that as a trend going forward. And I think that the cost of CapEx, with the S9 generation, CapEx on immersion was just way outside of bounds. It just didn't work. But going forward, I think we're going to see that going forward a lot. And then in 2022, we're going to see that as a mega trend, to take the current generation of machines, the 19s, and make them and give them longer life and make them more efficient. It's going to be through immersion. So I think from an optimization standpoint, it's all about keeping the machines alive as long as possible. And keeping them up and hashing as best you can. So those are areas where we work on a regular basis every day.
Yeah, I don't need to reiterate the software aspect of automation. I think this at the end of the day is a cost cutting game. Everything from power generation costs to, ongoing operating costs, trying to find efficiencies there, and being able to leverage technology and able to do, in order to do that, I think is paramount to being successful. But then there's, other ongoing operational issues that come up. I mean, these, as much as I'd love for Bitmain units to work flawlessly, sometimes things break. I think it's just the nature of operating anything at a significant scale. So being able to manage repairs efficiently is definitely an area of optimization that you can build at a mining farm. We've gotten great support from Bitmain and had a number of our technicians go through the ANT Training Academy. To basically bring that knowledge and expertise in-house. So being able to basically, do on-chip level repairs and get those machines back to working and back to hashing faster than sending them back through the RMA process is definitely like a huge efficiency gain that, we've been able to realize, and hopefully we're going to be able to realize it at a more significant scale here as we continue to grow. But that's definitely one of those aspects of the business where it makes sense at scale. A lot of people have talked about scale and efficiencies and whatnot that you get from operating at a significant scale. If you have a small mining operation, it might not make sense for you to have a technician on staff full time that's there to fix and repair units. But if you have thousands and tens of thousands of units operational, suddenly it makes a ton of sense and pays for itself very, very quickly. So that's all I'll say. Yeah.
And I'll just add that, another feature that we're really working on in terms of optimizing our operations, it's the scale of our power generation facilities. And so right now, Crusoe operates about 20 power plants, 2 megawatt scale power plants distributed throughout North Dakota, Montana. We've done projects in Colorado and Wyoming also. And we have a really great staff. I think a staff that anybody, in the energy industry or utilities or oil companies would be jealous of the sort of mechanics and electricians and engineering that we have now with about 55 employees here. But I think what's going to be, really exciting is when we can announce a few of the new projects we're working on, where we're going to do like an order of magnitude larger projects. I think it's really going to surprise people how big we can go with this flare mitigation approach. And so, stepping it up into tens of megawatts at a site powered entirely by wasted flare gas, it's going to be really exciting to share that. And that, that brings the cost down, that brings the effective cost of power down by going for those larger, more efficient power generation systems. And also lets us kind of get more out of our staff, right? Because you can spread the same employee base across a larger number of megawatts or a large megawatt site. And it's very concentrated that way. So a couple of things that we're working on there. It's really pretty engineering intensive and operationally requires just a lot of special skills that we've been able to put together over the last 3 years. But we're on the cusp of being able to share some pretty cool news, and so kind of watch that space. We'll be trying to update the industry as we bring some of these new projects online.
Thanks, Cully.
Yeah.
Greg, I'm sure you did you want to add anything? But just
I do, yeah. I mean, I think everybody pretty much touched base on the same things I was going to suggest. Software is very important. I do think that there's a lot of constraints, let's just say, in the home hobbyist miner world, that there's inability to fix these machines. And as they said, having these institutionalized data centers, you're going to have trained staff on site who knows how to fix this equipment. You're going to have software designed to help maximize your uptime. These are all key parts of, I think, the business model. Obviously, most of the bigger miners in North America are focusing on the latest generation equipment, which kind of helps set them up for the future. And I just think something unique about our business is that we are kind of a power plant crypto mining hybrid. We're directly connected to one of the largest gas pipeline systems, which provides us with access to some of the cheapest natural gas in North America. Additionally, this provides us with very liquid forward gas market and enables us to hedge our variable costs of production on multiple years. We currently have gas hedge positions out as far as mid 2022, and are consistently evaluating the forward curve for additional opportunities.
Yeah, Greg, to add to that, Greenwich was kind enough to let our head of research, Sam Doctor, visit their facility last week, and he was absolutely blown away. He just said it was an awesome experience.
Yeah, I mean, I've been to a lot of mining farms, and I got to say, this is pretty impressive.
Yeah. Well, guys, I just want to be mindful of time. We only have a few minutes left, and maybe we should do like a lightning round or just a quick sprint here. And then I don't know if we're gonna I'll defer to Nathaniel if we'll have any time for questions. But really, one of the questions that Bitmain wanted us to cover is the cost of power. Where do you see where do you need to be as far as price of power to stay competitive now and into the future? Russell, if you want to start us off, maybe.
Oh, in the hosting space, you need to be, 5 to 6 cents is I think where you're at right now. If you're the actual operator, you need to be sub 4 cents. It needs to be and I'm talking all in cost with taxes and everything. I think the trend is going to be more renewables and try to get sub 3 cents. But I think if you're sub 4 cents and you have pretty good control of your CapEx and your OpEx, then you can do okay as well.
I agree.
Yeah, I agree with what Russell's saying. I mean, I think, for the average person to be in mining, you got to be under 6 cents. One of the unique things, we look at power a little bit differently now than I have in the past. As a power plant, we look at Bitcoin mining economics in terms of dollars per megawatt hour, because this is our unit of measurement for measuring costs and revenue to the state energy grid. This includes the cost of the natural gas too. So for us, we look at, what kind of generation are we going to get per megawatt hour? Whereas, normally we were looking at, how much are we paying per kilowatt hour? It's a little bit different now for us.
Yeah, I think that's right. And I think those numbers that Russell said are pretty spot on. And, another thing I'll just mention on it is that it's kind of a deceiving moment right now, because if you take a new generation machine and you say, oh, look what my revenue is per kilowatt hour, like this is great. But, to Coley's point and to some other points earlier around, this wave of hash rate that's going to be coming online, that's going to drive down those economics. And, it's going to be difficult for those people that are sort of in sort of that higher per kilowatt hour marginal cost to recover their costs. Like, today, the power price, just because mining economics are so good, is a small percentage of the total revenue, right? So, which is why you're seeing very, very high margins and, a lot of excess profit sort of happening in the mining space. But I don't think any of us on this panel or anyone that's been in the mining space for a long period of time is going to bet their, bet that things are going to remain this way. I mean, it's a competitive marketplace. So we expect that to, happen in the future.
Cully, Dave, any?
Yeah, I can just add to that. I think, high level, this is a perfectly competitive market at the end of the day at a global scale. And certainly there's going to be price pressures around the economics of this. To Chase's point, if you're taking a 7 cent power deal right now, it feels pretty good if you're producing at 25, 30, 45 cents, whatever your cost on your actual unit is, it looks great. It doesn't in the scenario when the hash rate catches up and all of a sudden you get pushed down and you're at 6 cents and you got competitors that are at 3 or 2.5 or something like that. So I think it's very imperative to watch that and plan for long ball, because it is easy to get caught up. We saw a lot of customers do this in 2018. And, they really face some hard times, and you got to be a bit of a contrarian in those types of markets and those type of sectors. So I think the question about like the actual power rate, I think is exactly, I'll just jump on. I like speaking after Russell, by the way, for the same reason he likes speaking after me, because there's a lot of things I agree. He talked a lot about being a strategic asset to the grid, being able to curtail, not being a parasitic 24/7 by 365 load. I think those are the kind of things that is going to help monetize and get those power rates down to even lower levels. because you're not having to run through those peak hours, those peak moments, and the grid is built for that very peak, for those top times when it really needs the energy. And the example of Texas is normally not in February, which is what caught the state by off guard. Normally it's in August, right? It's when the hottest hours of the day, it's in the hottest days of the month. It's when everyone's turning on the air conditioning and the grid is really getting pushed. That is absolutely the time when Bitcoin mining should be turned off, right? And if you can take those kind of curtailment events, and this is a pretty unique computing sector which can do that, there's a lot of value that can be monetized as a result of that. And then overall power and energy story, I think, goes way down. And those are some of the areas that I think we're just at the early innings. I think, you know, that's going to become a bigger narrative as we go forward. And I think that's going to help, particularly in North America, where the grids are certainly need this type of load. I think it's going to help drive those economics to even lower levels and be some of the lowest costs in the entire world.
I want to add to what Dave just said there, and that is grid players, the big industry energy producers, are only just now learning the space. They've only just now started to have experience with the compute north and the core. So those have been around for a few years, have paid their bills, have come to them and said, yeah, we want 100 megawatts and we're going to use it 24/7. And they thought, there's no way in hell you're going to use it for 24/7. And then we do. And that's when they're learning. And what they just said, the grid and the industry players in the grid are learning the flexibility of crypto miners. And I think we're going to see a lot more efficiency into the future from that. And I just want to reiterate, I think that's a strong point.
Thanks, Russell. I just want to be mindful of time. Nathaniel, how are we doing? I think we might be in injury time.
Hey guys, yeah, I think now we could move on to some Q&A questions. Then I'll extend like the panel to like a little bit. Then we could do a few questions. Then I guess we end this first panel discussion. I think if we look at the,
I answered some of them. Sorry. Just,
yeah. So I think we could, if there's still a few questions, I think we could answer a few of those. I think they start from 10:59 in the chat.
Tim, you going to tee him up?
Yeah, I'm sorry, Nathaniel. I'm unfortunately missing him.
how do you see the mining industry to drive sustainable energy production and competition with other sustainable energy users? How do the sustainability demands vary across the globe and markets? Anyone want to?
Chase, can you repeat the
Can you
question?
repeat the question? Yeah, I didn't hear it.
Sorry.
I can answer it. So it's basically how does the mining industry drive sustainable, basically how is the mining industry aligned with sustainability? And I think, long-term, what's unique, Dave talked about this earlier, but, green energy production typically is highly distributed in nature between, wind and solar generation. I think what mining does, because it's portable, because it's interruptible, because it's can be curtailed, it has all these unique properties that a number of other people on the panel have discussed. It actually incentivizes and creates a monetary incentive to basically develop new greenfield renewable development, which is a really, really exciting thing when you see it as this alternative lever that can be sort of a way to provide an offtake that you can simultaneously monetize.
Chase, thanks for that. Another question, Russell, could you elaborate on the best software that can improve machine performance and longevity? Maybe some of the work that Core's doing in that area.
So we use our own software. It's called Minder, and we developed it over a 4-year period, and mostly because at the time the off-the-shelf stuff just didn't handle the number of machines that we needed it to handle because the database just got so damn large it would crash. So we developed our own internal bespoke software, and then our own clients hosting. They request various features, and our software guys go in and develop those features for the clients. But I'm also sure there's some great software out there. And I think most folks on the panel have developed their own bespoke solution or either have customized solutions that are out there. So there's a lot of good software out there. I'll let some of those folks that use some of the stuff in the field elaborate a little more.
Yeah, I agree with what Russell said. There's really, right now the industry is very fragmented. Bitmain has their BTC tools. MicroBT has their own tool. The solutions that are really out there today are really more catered around the consumer and not around the institutional player where you've got tens of thousands of machines. So most of these types of operations end up developing their own in-house solution that's catered around their specific business needs. There are some consumer products out there like Awesome Miner or something like that that'll help the average consumer aggregate, various model machines into one platform, but it's not designed for scaling with multi-tenant or anything like that.
Yeah. Yeah, we face that a lot at Crusoe, just because, we have a unique solution kind of, where we are vertically integrated from power production to actual operations of the unit. So we're actually interfacing with our generators and our actual power production, in addition to, having an automated system that interfaces with the machines as well. So we've had to do the same thing and kind of develop our own in-house solution. But I think, there's probably room for, greater standardization there. It seems like a lot of the work is being done many different times. And I would actually say the same thing about the machine form factors. I think everybody in the industry would be like super grateful if there was like
stuck with one
standardization around rack mounted servers or something like this. Cause
I'd love to see something like that.
Yeah.
We didn't even talk about that, but I don't see it in the future, but I would love to see that in the future.
Yeah, exactly. They're doing cutouts and adjustments to basically fit, the S19 form factor, the S17 form factor, the S9, to the extent
and
different plug use non-Bitmain product,
and different plug types after you've spent a lot of capex building a particular type of form factor and plug type, and then all of a sudden something new comes along.
And you're like, yeah, come on. Yeah.
Everyone's unique, bespoke.
Very frustrating.
Tim, we're in the same boat as everybody else, where we ended up developing our own platform called Miner Sentry. We ran into the same issues in terms of scale, like multi-tenancy, like all those kind of components. So we built it. I have seen some really impressive new software developments over the last 12 months. Again, I'll go to my previous comment about just everyone's innovating in the sector, in the space. So I think there are some pretty good ones now that are available to scale, but we already had the IP, we already got it under development, and it's an integral part to our org. So we've continued down that route for the time being.
Thanks for that. Nathaniel, do we have time for one more question, or are we?
Yeah, we could do one more question.
Okay, guys, thoughts on altcoin mining? That's our final question.
I mean, I can chime in here. So, I mean, I've been a miner since 2012, and I would say that I actually started with altcoins. So I do think that people should be open-minded to it. I know all the attention, both from the manufacturers and most of the consumers, has been on Bitcoin mining, but there are other unique strategies of mining alternative coins. And look at Ethereum, for example, with GPUs. I mean, I've been mining with GPU since 2012, and I got to say, I go turn them back on now because the economics of mining Ethereum look good. Some things will change. I mean, if these protocol changes happen, the earnings on Ethereum may drop, but we're starting to see kind of an uptick in some of the alternative coins that may become a viable option using 4 gig graphics cards again, whereas everybody thought they were going to kind of just end up useless for mining. They found new life. So. And I think, the manufacturers really haven't focused on any new generations of altcoin miners. Some of this equipment is 4 or 5 years old at this point, and it's not at the latest generation. But, I do think people should consider it and look into it.
My perspective on altcoins is, we have customers that are all different types of proof of work, and certainly support all those mechanisms. Everyone's got a little bit of, approach to it. Obviously, Zcash, Monero, more privacy-based. You know, Ethereum's got the smart contracts and all the other elements. So I think it's great to see the innovation. I think it's great to see the different sectors. The last I checked, too, I was looking up the different consensus mechanisms, and there was 27, which is unbelievable to think about the different ways. I saw one the other day. It was proof of coverage. It was like a wireless network, and I mean, it's just the innovation going on in that sector is amazing. Now, to the point earlier, though, of Bitcoin being the granddaddy, no question about it. I mean, when I look at, so I cut my teeth originally, I started an internet provider in the 90s, and the internet took the same trajectory, but what made the internet so successful, if you take a step back, was the 7-layer OSI model, right? Everything was standardized. Each development could be built upon its own, and it be created a layer. I look at Bitcoin almost as like a layer 8 onto the internet, where a lot of things are going to be built on top of it, and it's a standard. And one thing about technology and standards is once they get momentum, once they're in place, they're very, very hard to move on. I'll talk about customers that still run payroll on AS400s from the 80s. I mean, they're still out there. And I just see Bitcoin having such momentum, such heft. It's always going to be proof of work. To Mike Coiler's comment earlier, it's not going anywhere, and it is going to be a standard for a long time to come. So I think it's probably the safest bet. But innovation is a good thing, and I think it's great. We're going to see other approaches and other techniques to different problems.
Yeah, Core Scientific, we're fans of altcoins, and we host tons of ASIC altcoins. We mine ourselves, and then at this point we host tens of thousands of GPUs as well, and all that's altcoins. And I don't see it going anywhere anytime soon. Ethereum might change or something, but there's lots of technology that uses the GPU mechanism for mining and stuff. So I think it's something we're fans of. I agree with Dave. Bitcoin is the granddaddy of it all, but they're all there, and all the tech's interesting.
Yeah, and I think that Bitcoin really is kind of leading the innovation, and you could see the technology kind of makes its way, down the pack for everybody else. Obviously, like most of the script ASICs, so to speak, are still using, old technology that haven't migrated to 7 nanometer yet. So I think Bitcoin, because of its value and its dominance, is really paving the way, and then the altcoins kind of follow with it.
So I'm a big supporter of, altcoin mining and, kind of what's happening there. We view it more as less of a primary business and more as like a base load business for our high performance computing business. I think, there's interesting workloads. When you look at like a large scale GPU computing data center for high performance computing, typically it's not under 100% utilization. And, altcoin mining can be like a really, effective sort of base load for revenue generation for those things. So, we're not really focused on doing it as the primary focus, but it's a nice like revenue icing for us. Instead of using 4 gig GPUs to mine Ethereum with, we're using like 48 gig GPUs or 80 gig GPUs to mine Ethereum. It's kind of like using a McLaren to deliver pizzas, but it does provide a nice base load for revenue.
Thanks, Chase. Nathaniel, did you are we out of time here?
Yep. Unfortunately, we're out of time. Really good conversation, though. Don't want it to stop.
Tim, Nathaniel, thank you very much for having us on the panel. It was fun.
Thanks, everybody.
Yes, thank you.
Thanks, everyone.
Yeah, guys, can't thank Bitmain enough for this. Thanks so much.
Yeah, thanks for having you.
Thanks, guys.
Okay, I think that's really interesting panel one discussion. So moving forward, I'd like to start on by calling the people from the second panel. So I'd like to call on Eugene Nang. He's the head of BD Asia Pacific from Gemini, Raymond Yuan, founder of Atlas Mining, Sheldon Bennett, CEO of DMG, Zachary Bradford, CEO of CleanSpark, and Ethan Vera, co-founder and CFO of Luxor.
Hi guys, thanks for inviting me. Super excited and pumped to be on this panel. So I'll kick off, thank you. I'm sure you guys have heard of Gemini. We're excited to be on this panel and As you know, we are, have ethos is really to push the future of money, and I think this is really apt, to have this panel. So why don't we start off with the introduction of all our distinguished speakers on panel 2. Maybe we'll kick off with Raymond, with a short intro and what you do and how this may be of interest to the people that is listening in.
Yeah, thank you. So first, I would like to give a brief introduction about myself and also my company. So basically, my background focuses on the venture capital business and the high-tech investment over the past 10 years. Since 2013, I'm an individual investor to Bitcoin. And since 2016, I founded my own company, and the whole company focuses on the crypto-related business. But in the first stage, we didn't start the mining business, but we start from the investment business because that's what we are more familiar in the past 10 years. So we have invested to more than 60 portfolio companies, including Coinbase, Canon, Polkadot, Chainlink, a lot of projects, and then we see that there is opportunity for us. We may not only to be a minority investor, and we can get deeply in this industry. That's why we get involved in the mining business later, and then we started mining business. And then right now we have 7 mining sites all around the world, and we want to expand our business in the West, especially. Yeah, that's basically what we did. Thank you.
And we have the next distinguished guest, Sheldon Bennett, CEO of DMG, to give a quick intro.
Thanks, Eugene. Hi, my name is Sheldon Bennett. I'm the CEO of DMG Blockchain Solutions. DMG was founded in 2016. We are a vertically integrated company. What that means is that we both do mining. Our mining is actually in British Columbia, Canada, which is all hydropower and renewable. We also host clients. We've been hosting clients since our inception. So we have a mixture of self-mining and hosting. Recently, we announced our conversion over to immersion cooling. So we're busy and big believers in the efficiencies of immersion cooling, and we're retrofitting our facility right now. We also manufacture and sell mining equipment, most notably containers, and in the future, immersion containers. But in our vertical integration, we also have a software division. Our software division started back in 2018, mainly with the acquisition of Dacian, which is the parent company of Blockseer and WalletScore, which works in digital forensics for cryptocurrencies, which are Bitcoin and Ethereum. As well, we made our own mine manager, as many people have come to the problem of scale of software to run large industrial sites. So we sell and license out our mine management software as well. And recently we've added on 2 pools. We finalized an agreement with the DCMA, so the Digital Currency Miners of North America, to use our clean block technology in their first pool, which is led by Marathon. And then we've just announced a second pool that we're putting together with Argo, where we will be the technology provider for a green pool called TerraPool, and TerraPool is addressing the issues of clean energy in cryptocurrency mining.
Great. Can we have the next panel to speaker to give an introduction? Zachary Belfort, CEO of CleanSpark, please.
Hey, thank you. Sorry, I had some IT troubles right as it started. CleanSpark, we are an energy company that focuses on distributed energy. As you heard in the last panel, there is a lot of focus on distributed energy so that we can bring clean energy into the mining space. And that's really our focus on mining. We currently have a 15 megawatt facility. We'll be at 50 megawatts by about July. And we're a fairly new entrant in the space. We are a public company. We're bringing a lot of resources and expect to bring a lot of change in how energy is managed and to bring better economics where possible. I'm happy to be here.
Thank you. Let's have our last and final panelist to give a quick intro. It's Ethan Vera, co-founder of Lexer Technologies, please.
Thanks, Eugene. Great to reconnect, and thanks, Bitmain, for hosting this panel. It's been really great today. Yeah, so my name is Ethan. I'm the co-founder and CFO of Luxor. We founded the company just over 3 years ago with the vision of building software products for institutional miners based in North America. And so today we run a number of different software products, including profit switching algorithms. And moving forward, we're really focused on building digital pipelines for what we see as a really exciting future commodity in hash rate. And so the company is very focused on hash rate as a commodity and a new asset class. Other than that, we've also built hashrateindex.com, which is a mining data website, has a number of interesting analysis and data sets, things like tracking the value of ASICs over time. All the data sets completely free to use, so feel free to jump over there and give us feedback on that. Yeah, thanks for having me, and looking forward to discussing mining with everyone.
Great. So I guess, to kick off, I guess one of the, topics I think that, everyone have, and I think it's the biggest question that it's on everyone's minds when it comes to cryptocurrency mining would be, what's the latest trend that you guys have observed, in the last 6 months? I think, especially with the bull market, it's been a lot of dramatic, I would say, in terms of how the outsiders, or whether it's listed companies or crypto native firms that have looked at the crypto mining space. So I'm sure there have been some interesting trends that you experts would have very good insight. So why don't we kick it off with Raymond, who have probably very good insights into what's really happening in the mining industry.
Thank you. So actually, they already talked a lot for the first panel, right, about the new trend, and I want to share from different perspective. And I think the innovation will not stop in this industry, both from the technology side and also from the business side. From technology side, I mean, obviously all the manufacturer of the miner, they will pursue the ultimate, the extreme computing efficiency, power efficiency. And also we may adopt the new technology of cooling system, like they mentioned, they will use the liquid cooling, immersion cooling system. But I want to emphasize, we may not ignore the innovation of the business model. So there's a new trend of the business model. You can say a lot of institutional investors want to separate from the two different business. I mean, trading Bitcoin is one kind of business, and mine Bitcoin is another kind of business. So that means sometimes, especially in Asian market, a lot of miner, they just sell the hash rate as a commodity, not the Bitcoin, because they are not expert in selling Bitcoin, right? So that's the two different business model. And another innovation of the business model happened in the US. It's totally different because they combine two different business, the energy business and also the mining business together. So it can be a hybrid business model. So that's one thing I want to share is the innovation of the business model. And the second thing is about the renewable energy. When we talk about renewable energy, we also talk about the ESG, the duty, the obligation, but it also can be a profit-driven behavior in the future. Because when you see, because as an institutional investor, you would like to see in the long term. I mean, you are a long-term profit-driven institution, right? So you can be, especially be rewarded from the if you use the renewable energy, because most of the energy consumption in this mining area will be the hydropower, right? Especially in China, in Canada, and I think in US maybe as well. The third thing is about is about the institutional investor. We're talking about a lot about the institutional investor. And I remember someone mentioned there's not a big wrong. There's no big wrong more for the cowboy in this area, because a lot of the institutional investors they join again. But I mean, there will be certainly a way for the small investor. It might be the tokenization of the hash rate, because for the institutional investor, they also want to hedge the risk. So sometimes they buy a lot of equipments and they run the business in a very large scale, but they can monetize. They can make tokenization, securitization, and they can sell the standard unit of the hash rate to the small investor. Yeah, that's what I observed in the past several months. Thank you.
Yeah, I'd love to jump in there and add to that hash rate token discussion. I think it's a really interesting trend and one that we haven't talked about a lot today. So in January, we saw 2 hash rate tokens launch, Binance and Poolin, and then last month we saw another one launch, Blockstream. And so really exciting developments there on the financialization of hash rate. And it relates to the large institutional players, as Raymond mentioned, but it also allows retail to get access to these markets. As they talked about in depth last panel, smaller players are getting forced out of the market just due to the cost of buying ASICs at bulk, hosting them at relatively cheap power prices. And so hash rate tokens and other hash rate based products provide retail an avenue to get access to the returns of Bitcoin mining. And different returns too. With hash rate tokens, you have exchange grade liquidity to your investment versus ASICs, relatively high cost when you're trying to liquidate your position. And so there are some advantages. You pay for those advantages ultimately with a premium. So Poolin's, for example, hash rate token is trading at around 10% premium over ASIC broker markets. Binance's is some few thousand above. And so I think, as retail gets involved there, they can expect to get a different profile for mining, which comes at a cost too. But overall, I'm really excited to see these developments because these are the first iterations, kind of like the sandbox instruments. I think from here, we can start to iterate on them as an industry and start building better and better products around the financialization of hash rate.
Yeah, I think hash rate is one of the biggest, topic, and it's definitely something that has been a recurring one, in a lot of conversations I have, and I'm sure Zachary would also have, some insights in that. So maybe, Zachary, you would like to give some, share your thoughts on specific industry trends and even hash rate features if you may have anything to say.
Yeah. I'm going to hit on a couple things. Also in addition to coins, or altcoins in a way to participate in hash rate. One of the things we've seen and obviously are a participant in is people that don't have exposure to Bitcoin that want some, that are able to participate in the form of ownership in public company stocks. And then I think that attracts people to other coins and it gets them directly involved in the industry, which I think is a benefit for all of us. So I really, to kind of hit on the financialization of the model, it comes down to exposure and comfort. And that's going to bring more people into all kinds of different coins, Bitcoin ownership directly, more interest in mining. So I think it's something that raises all ships. What obviously we're paying attention to obviously too is difficulty. And to kind of circle back to how the hash rate is being looked at, I think it's important to focus that I think the market is looking at all hash rates are not created equal. And what I mean by that, I think that companies being good corporate citizens is going to become more and more important. And I think as there are alternative ways to access hash rate or participate in it, I do think that there is going to be a focus on participating in hash rate generated in carbon neutral environments. And I think that one thing you're going to see, Ethan kind of pointed to it as different ways to participate in hash. I think some companies are going to be able to sell that access when they can and get a premium for it when it's done in a method that is clean energy driven. So Clearly, that was a big focus of the last panel. We're big believers in that, and really think that that's also a way that's going to keep the industry free of additional regulation. Is if we really focus on how we're producing the hash rate. It's obviously going to go up. There's a lot of miners coming to the market, but I do think that all hash rates are not going to be seen as equal in value going forward. So.
Maybe I'll add a bit here as well. So I think, the biggest trend is the movement of institutional money to Bitcoin. Others have followed into other coins, but by far it's institutional money, much different than the last time Bitcoin went on a big tear up to 20,000. And I think understanding that money is sort of the key to a lot of the Bitcoin companies that are on these panels and focused on this industry. It's a more sophisticated money, it's more long-term money, but it also comes with sort of rules or regulations or, sort of ideas behind it. And so, a lot of us have talked about ESG for the first time. When we first started out as Bitcoin miners, it was get power cheap, get it fast, and start mining. And, a lot of that wasn't clean energy. Now, when you start talking about the longevity of your operations, renewable energy is the cheapest. It just takes a little bit of capital to get it going and running properly, and it will always outperform non-renewable energy over the long term. And that's the type of money that's coming into this industry. When you look at institutional money, they're looking to be good corporate citizens, and they want to put their money into good corporate citizens when you start looking at the companies that are involved in generating Bitcoin and moving it around. So I think, if you want to make the ecosystem of Bitcoin bigger and get more people involved and grow this, as you're seeing with the price of Bitcoin growing and the amount of wallets growing and, the industry overall growing, you also have to look at some of the rules they play by. And you'll see this happening a lot in the US and other countries. It's about regulation and regulation, not in a bad way, but regulation in a way that those big players can continue to join in and bring their clients in and grow this whole Bitcoin ecosystem. If we can't get the regulation to work for these large institutions, they will shy away like they did before, and they'll either exit it or they won't enter at all. And so you have some institutions that can come in, like the Teslas, where they don't have the regulation the same where like a JP Morgan would have. And so once we can unlock a lot of these issues, I think that's going to be another catalyst for continued growth and bringing mainstream people that don't normally have a Bitcoin wallet, but they might all of a sudden have Bitcoin added to their bank account, along with checking and savings and their mortgage. They might have Bitcoin, and they can actually start getting involved in the Bitcoin ecosystem through their financial partners. And I think that's really the big trend that's happening. And it's how we as companies now take on the issues of getting more money and more users and more adoption into the industry. It's going to tell what's going to happen to the Bitcoin price, what's going to happen to our businesses. And so for me, that movement of new capital that is institutional capital is probably the biggest trend that's happening right now. And it's how we react as an industry. Are we going to stand up and do things like, as we've announced, we have a couple of pools that are focused in on regulation, on clean energy, and we're trying to find the things that we can do to help unlock the industry to more capital coming in, which is better for everybody on this panel and everybody in this industry.
Yeah, and I think, one of the biggest themes for the last 6 months would be the institutionals, coming into the space and really having all these headlines, whether it's JP Morgan or BlackRock. I think it's really been quite significant, right? And with that, I think it really take up the entire bit of Bitcoin mining sector. So I guess, a broad question, very nice. I think a question that I think most people will have is, how do you guys see institutions, getting involved and versus like how are they interested in Bitcoin mining? How are they looking at that, versus a holding and buy and hold strategy, or is it, investing in different products? So I think this is a great question for everybody listening in. So maybe we'll kick it off with Zach, to talk about that, and we can just pass on the bait.
Yeah, absolutely. We've been lucky enough to be participating in the institutional funding, so having a lot of conversations with groups. And something I think that we still need to bridge the gap on is most institutions want indirect participation. So there's still a lot of laws and governances that are barring many, many groups and banks from direct participation. And, you know, direct participation of institutions at all levels is going to be important for to be kind of the cornerstone of the industry, because it will create stability. It will move some of the volatility out, but it will create also, I think, long-term price upward movement. And so just knowing that what I really believe right now is institutions are getting involved, and it's made a dramatic impact to the market. You know, you just look at the top 5 largest public companies in the US, and there's been, you know, several $1 billion of investments in public companies in a way that there hasn't been in the past. So I think it's a really good cornerstone for acceptance. I still think we need to see more direct corporate participation in treasury management, like we're seeing with MicroStrategies, like we're seeing with Tesla and other groups. But I think we're just at the beginning of what this is going to be from an adoption point of view. And I think it's just going to get stronger. But, you know, I think we just have to have a little bit of patience. And I think once we get through the adoption on the Bitcoin side, then that's when institutions will open themselves up a little bit more to Ethereum and other things. But, you know, again, I'm going to come back to the same point, because we're really that hybrid model you mentioned. We're an energy company involved in Bitcoin mining. It's going to be incredibly important that, you know, ESG is really considered, that we really look at being the good corporate citizens. You know, to tie into what Sheldon said, you know, gone are the days of, in my opinion, of somebody buying a coal-fired power plant that they could turn on tomorrow and, you know, turning it back on to mine Bitcoin. I think that may work in a very temporary format, but it's not a long-term solution. And renewables are going to be the key. And I think also, you know, I think making sure the institutions understand the additional benefits that can be brought. In the prior panel, it was talked about what can be done in Texas, where you bring up, you know, 100 megawatts and take it offline. In demand response is really what that is, and you know, distributing it further, participating in demand response. You know, what many miners also don't realize is there's revenue streams associated with that. So you don't just have to take it off for the benefit of the greater good, but you can get paid for bringing it offline. So I do think that miners are going to always have to educate themselves further on the energy business. And in doing so, we can pass that knowledge to the institutions. The institutions are eager, they're hungry to participate. We just need to help, you know, kind of help them bridge the gap. And then I really think it'll raise all ships along the way.
How about Ethan? What do you think? You know, and you know, from your perspective, especially in Canada, do you see, you know, institutions in that part of the world getting interested, and how are they viewing mining as a business or an investment thesis?
I think there's a few things that differentiate investing in mining versus investing directly in Bitcoin, both of which I think are great for institutions, and we're going to see a lot of in the future. On a philosophical perspective, companies that are building their business on Bitcoin, you know, whether they're DCG has been with Foundry or Galaxy Digital, or in the future somebody like a Fidelity, you need an active role in the consensus algorithm that's determining what happens on the network that you're building on. And so we've seen that with technology like Taproot, where if you don't have a mining division of your company, you don't have a real say in the decisions of Taproot. And luckily, that's not that controversial, but I think there could be things in the future that companies, Bitcoin-focused companies, should be, you know, wanting a seat at the table on. So that's kind of like the philosophical governance angle. But from an economic standpoint, I think there's a lot of reasons why you'd want a mining operation or invest directly into a mining operation like the one Zach or Sheldon runs. You know, investing directly in is kind of the same play as playing a senior gold producer, where you get some torque to the underlying commodity. If the price of Bitcoin goes up X percentage, you can expect those public equities to go up X plus 1, just given the high beta to the underlying commodity. So it's a very strong play if you're very long and bullish on Bitcoin. The second would be getting access to Bitcoin at a discount to spot. You could go ahead and go market buy Bitcoin at, you know, 63K right now, which is, in my opinion, still cheap. But what you could also do is go invest in a mining operation and produce that Bitcoin at less than $10,000 a coin, you know, assuming that hash price stays at 36 cents a terahash per day right now. you know, and you're operating at 80% plus mining margin. So I think there's a number of reasons why we'll see large institutions invest directly in public mining companies or add mining operations directly to their revenue streams. And you're seeing that now explode. I think the landscape of publicly listed mining companies has grown exponentially over the past year. Lots of companies that otherwise hadn't mined in 2020 are now adding machines to their balance sheet. And so it's a trend that's happening as we speak. And I'm really excited to see that continue here.
How about Raymond? You know, in the other parts of other than America, do you see, you know, what sort of conversations are you hearing in the institutional space? You know, we have a few very prominent, you know, firms in Asia like Meitu, who have announced that they've invested in, you know, their balance sheet in Bitcoin. So I'm pretty confident that there are some firms looking at, you know, investing upstream in Bitcoin mining, and or alternatively buying and holding crypto. So what's your take on that?
Yes, I think like Ethan mentioned, actually for the institutional investor, there are two different alternative options. They can just buy, for institutional investor, they can just buy the Bitcoin from the public market, or they can use it to the mining industry. And for them, maybe there still are a lot of challenge for them to direct participation. So sometimes they use some specific vehicle, like sometimes they just join the investor to the public company, and sometimes they can be a LP to a special vehicle to participate in mining business. And for us, actually in 2019, we launched the first Bitcoin Trust in Hong Kong. That means the family office and also the traditional investor, they can just buy the trust, buy the unit trust, and to participate in the mining business. So I mean, for them, there will be still several options. It depends on the style of the institution. For some institution, they may want to directly participate the industry, like DCG. They set up the foundry, and also I'm seeing some, how to say, the player from the original from the industry. They may want to have direct participation, but for some traditional institution, they may just choose a different way. Yeah.
Great. And what about Sheldon? Do you see anything, you hear anything specifically with respect to institutions, and how are they viewing, you know, the Bitcoin investment thesis?
Yeah, I mean, institutions, I think we kind of covered it with the other panelists. I mean, there's a couple different ways. They either go in and buy coins, and you'll see some of them doing that, or they go into companies, and that was the amount of sort of money that public companies have raised through institutions. Pretty much any public company, even ourselves, have raised a large amount of money through public institutions, bringing their investment into companies as a way to get into this business. But I also think, you know, when we're talking about big trends, what's happening, you know, the biggest is the movement of institutional money into this industry. I think there's another big trend that comes with that as this industry is maturing and it's being seen in a different light. I remember when I started a long time ago in this industry, I was seen as some type of strange person doing, you know, dark web transactions because I was trying to make Bitcoin, and I was nefarious in some way, and nobody wanted to bank with me. It was hard to get a bank account as a company, and then a public company, and people didn't want to do business with me because they, you know, didn't want to lease me, you know, land or whatever, because they were afraid that they would be involved in some type of bad or illicit activities. But what I've seen change with the amount of sort of hash rate that's coming to North America specifically is, you know, I had a lot of really difficult conversations with my power company. We ended up building our own substation to get around a lot of these problems. So we have a, you know, private access to power through our utility. But I've seen the energy sector, and the other panel talked about this with what happened in Texas, is the energy sector started, you know, if you go back, you know, 4 years, 5 years ago, if you went to them and said, I want to buy 40 megawatts of power or 60 megawatts or whatever the number was, they would sort of tell you that they'll give it to you at this price, and you would say, well, no, I want that price. And they would look at you like you're from Mars. Well, you can't tell me what price I want power at. I tell you, I control the means of production, so I'll tell you what you're going to pay for it. But as they've started working and learning more about Bitcoin mining, I did a bunch of power studies for our utility to show them how we consume power, the harmonics, and how we can integrate and be a great base load, and how the benefits of our power usage are for that utility, that area, that community. They've really started to change their conversation. And as they've seen investor money going in, when CEOs of utilities see Elon Musk put $1.5 billion into crypto, they start thinking about it differently, and they start thinking about this industry differently. And I think that's been a positive impact. And a lot of us that have gone out, when I first asked for 40 megawatts from a utility in British Columbia, I could, first of all, they wouldn't return my calls. They were laughing so hard because nobody needs 40 megawatts unless I'm a pulp mill. Why would I need it? Now it's, they're calling me saying, hey, do you want more power? We want your base load. We want to work on you in curtailment. We want you to bring stability. And the other thing that we've done is we've brought a stability to the rates of people around us, because their bills are so big. They don't increase rates for their ratepayers around because they have so much revenue from us as a large load. So I think that's changing, and that's a positive thing. So as long as we can keep moving into these discussions with the power generators and the power utilities that we rely upon, and move into renewables, I think that's a big part of what's going to make crypto mining and cryptocurrency mainstream and more popular, have a better reputation when utilities and government officials, because most utilities are regulated, or pretty much all of them are regulated in some way because of people using power. When they start getting nicer, more positive things to say about this industry, about how professional we are and how we manage this asset and the power that we purchase in a positive way for the communities that we operate in, I think that's a big part of institutional investors getting more interested in what we're doing, people getting more interested in what we're doing, us creating an industry that we can say, yeah, we're in the Bitcoin industry and we're doing good things. We're not just bad coal-fired power consumers trying to make Bitcoins for nefarious reasons. No, we're doing great things with it. The Bitcoins we're creating are going to the financial system, and people are quite, enjoying using this new financial instrument for different reasons. And we're trying to do it over time in a better and better way, so we become a well-respected industry over time.
Yeah, I think that's great. I think with the spotlight on institutions and with the focus on ESG, and now interestingly, I think that there are a lot of headlines and people are talking about the shortages in high-end chips, right? And that leads to price inflation on those chips. And I think the bigger question is the combination of ESG, the desire to have clean energy, the desire to have more high-functioning machines, and also institutions coming in. What sort of innovations, what sort of technological breakthroughs are you guys seeing that could be emerging in the next 6 months that could be interesting to share with the audience today? So why don't we kick off with Ethan to talk about that?
Yeah, I think that there's a lot that probably the four of us can cover. I'll start with different financing, because I think that's been one of the biggest changes from the bear market. There's always kind of been the traditional debt and equity financing, but we've seen new forms of financing become available for mid and large scale miners. The first would be kind of ASIC financing. Mike talked about it a lot in his first speech, which is basically the idea that somebody lends to you and takes your ASICs as collateral, which is very common in traditional manufacturing or businesses, this kind of leasing model. And so that's been amazing to see. We've seen a lot of miners be able to acquire machines through that method. And we've seen those economics become, more favorable for miners, dropping down to, on average, kind of like the low teens or teens-ish area. And the other benefit it gives miners is it allows them a stream of machines that it would otherwise be hard to get. So some of these financiers can aggregate machine orders from players like Bitmain, and then dish them out to mid-scale miners, which otherwise may have had a hard time getting them. So it's kind of like it provides two things really, the financing and the machines. There's a lot of other interesting developments on that angle too, specifically around hash rate. It's still in its infancy, but there are some kind of bespoke or one-on-one bilateral agreements being arranged between miners and investors that are set up similar to an offtake agreement or streaming service that we see in traditional commodities or oil and gas. And so those offtake agreements, for example, will allow an investor to come in, give a miner capital to expand their operations or build out a mining farm with the future expectations of hash rate being delivered to them. And so I'm really excited to see those types of technologies and financial instruments develop over the course of the rest of 2021 and heading into 2022. And ultimately, I think it'll make miners a much stronger and more stable company so that they can continue to secure the network for the overall ecosystem.
Oh, how about Zach? Do you have anything to add with respect to innovations and sort of next 6 months trend when it comes to mining?
Yeah, from an innovations point of view, some of the other larger providers have talked about software to really automate mining. We also have our own internal developed software that manages that. So I think we're going to see more and more improvements. But really, again, to circle back to what we do is on the energy side. I think there's a lot of innovation to be had on the energy side. I think there's a lot of participants that don't realize, either alternative revenue streams that they can participate in, or different products that exist on the energy side, whether it's quality of power. Really understanding the quality of the power coming to your facility, it can make your units run better at lower temperatures, at lower total wattage pull, and a variety of other things. So really focusing in on refining and improving the energy side. So I think that there's a lot of innovations. I know that we're a little bit short on time, but that's really going to be our focus, is to drive down net costs for mining with a focus on what is everybody's real cost of mining, and that's energy. So we have quite a few things in the works. Can't mention all of them right now because of course we're public. So we'll announce them when they're ready. But we're real excited about the energy developments in the market and how it can improve profitability.
Yeah, I can add to that since we're running out of time. When I first started in this industry, everything was air cooled, and it was done for a reason. One, immersion cooling was very expensive, and two, it was just the time to get things up and running was very fast. So you're creating cash flow immediately. I think immersion is really close. I mean, we have immersion tanks that we've been running and testing. We've done some power studies on them, looking at the efficiency, and I just think that that's where this industry is going. The other panel touched on this, that CapEx is coming down. People are trying different things. So lots of companies are trying different engineering. I think that, when you talk about, institutional investors, you talk about power. I think the next piece is the efficiency of that power. And, our studies, and actually we did our studies on Bitmains a year. So it's great to say that we actually used the T17 for our studies. We were showing immersion. We thought maybe a 10% drop in power, keeping the hash rate steady. And, we use a third-party independent company to do our power studies, and they got it closer to 20%. So that's a huge amount of power savings from immersion. And this is without overclocking. This is pure running the equipment as is. And I think that that's going to continue. You talk about ESG. Well, one part is just going to renewables, but the other was just using less energy for the same amount of compute and working on those efficiencies. And I don't see anything right now other than immersion that can really push this equipment harder and use more power to do it and create more hash rate with less energy. So, and it gives you better return on your equipment, and it runs better, and it's just so many advantages to it. It's not as noisy for those of you that have been in a Bitcoin mine. So there's great things to it, especially if you have neighbors and noise issues. So yeah, I think that's the next for miners. I think the next big thing is going to be, converting over to immersion. And I think that's going to start happening a lot sooner than people think. I think when they really realize the uptake in this, they'll realize that, yes, there's going to be CapEx. You're going to have to change some of your infrastructure. But the ROI on it, especially with Bitcoin price the way it is now, is so fast and makes so much sense that it's going to be, up there as leading things that crypto miners are going to do.
Yes, I agree with you. I think when we talk about the innovation of the technology, we pay a lot of attention to the efficiency, right? We want to optimize the efficiency of the equipment. But I want to emphasize is sometimes we also need to pay some attention to the low end, but not high end equipment, low end equipment. That means we can extend the lifetime of the equipment. After 3 years, 5 years later, if you can still run S17, it's great. Because now even S9 is profitable, right? Max profit. So I mean, for immersion cooling and also the other technology, we may pay more attention to the low-end equipment to extend the lifetime of the equipment. Yeah.
Yeah, so I guess we really can't. With all four panelists, I think it's absolutely amazing to have the brightest minds in crypto mining talking about the different things, the latest trends, and how institutions are getting involved. I think more importantly, we've come to the end of the panel discussion, and we should start looking at some of the Q&A. And I think there's some really interesting questions out there, and I think some of them are quite interesting and relevant, and maybe why don't we pick one or two questions for us to respond. I think there are around 18 questions. Is there any questions that any of you guys on the panel would like to take on and help address any of those questions?
Well, I see one to me, so maybe since nobody else is talking, it says, Sheldon, how important is the Blockseer tech to the rising regulatory concerns? Megan, to the pool Blockseer, also the revenue collected directly linked to hash rate deployed. So I think this is regarding sort of Blockseer pool, which we license that technology off to 2 other organizations. The Blockseer technology is a technology that is made for sort of labeling wallets, obviously looking for bad wallets related to criminal activity or are things of a nefarious nature that we've been doing for a long time. Other companies have been doing this as well, CipherTrace and Elliptic and Chainalysis do the same type of thing. We've taken that technology and we've taken it into the pool area and started going, if you're running a pool, perhaps you don't want to do business with certain wallets that are linked to certain activities, especially OFAC. These are the U.S. Department of Treasury's list of sort of blacklisted or banned wallets for U.S. companies and people that have this governance to follow to do business with these types of wallets. And so we brought that technology into the pools. And we did it proactively. So, every transaction that goes in an M pool will be processed. It may not be processed in a pool that, we're giving our technology to, but another pool that doesn't use the same type of technology of filtering through and looking for banned transactions from the US government or other sources will process it. So we don't really think we're providing censorship. We think that we're just providing an outlet for companies or institutions or players in this industry that want to do business in a certain way. And this goes back to what I said earlier about institutions getting involved in crypto. If there's a legal means by which institutions can get involved, then they'll take that path. If they're stuck trying to figure this stuff out themselves and figure out how they can do things legally, they'll have a lot harder time putting money into this into the crypto market and growing that ecosystem and bringing their clients into this business. And so, the regulatory concerns, I think you have to take them with a grain of salt. There's regulatory as in, let's grow this business and this ecosystem in a way that brings it more mainstream. And there's regulatory as in, there's a criminal element that has to be dealt with. And, I think of, Bitcoin or other cryptos, just like any other financial institute, whether it's dollars or wire transfers or it's, whatever it may be, for it to be in the public domain and be used, there needs to be rules and regulations around it. Now, Bitcoin is a little bit different because it's not ruled by government, but for governments to let their citizens and their financial institutions work with it, they have some rules about, you know, what's happening and how it should be managed, to be fair to everybody in that country, in using it. So, you know, it's always a tough question as somebody that really loves Bitcoin, and the ideas of Bitcoin being sort of free and anonymous, or at least not controlled by government. I don't really think what we're doing is controlling it by government and putting in, you know, great government regulations or control in what we say, you know, people can and can't do with their wallets, and, you know, who can do what. All we're saying is that for this little piece here, these people care who they're doing business with, and we're going to give them the tools to do that business the way they want to.
Great. Maybe we take one more. Anybody have any question that you guys want to take to help address?
Yeah, I see one question from Matt B here on hash rate tokens and derivatives, pointing out that it's really hard for smaller or medium-sized miners to engage with the existing product sets out there. And that's absolutely true. Blockstream, for example, is selling hash rate forward of their own facilities. Same with Poolin. I think Binance is offering the opportunity for partnering mining farms to come in and sell forward some hash rate in the form of tokens, but it's still not generally available to the public. So most of these deals are happening kind of bilaterally between a miner and a family office, or a miner and an investor. So there's not a lot of opportunities right now for a miner to go to a marketplace, for example, or one provider and sell forward that hash rate. But I think in the future, this is something my company is trying to build. I know a few others are as well, is build the underlying infrastructure to allow anyone to participate in that type of transaction. So I guess the answer is not yet, but it's coming.
Yeah, and I'm going to add on that a little bit, just because, you know, that's something that, you know, we're interested in also creating some access to. But I think it's going to come down to country specific. In the US, anything like that that's a derivative is going to be looked at as a security. And I still think we're 18 months out, at least, from the SEC making anything a little bit more clear. And then it's going to come down to, you know, really registering some of these for trading. And there's going to be all kinds of different laws, and what that's going to mean is going to be country specific. I do think some countries are going to be a little more welcoming than others. You know, I think the US is going to fall somewhere in the middle when it comes to that. So, you know, there's a lot of pushback on some of the coins and the altcoins and how that works. I really think that the best way to participate indirectly is probably through, you know, investments in miners, and that's probably the best way right now. I do think that will change and create a little bit more open access, and I frankly think that access may be driven by some of the public company miners being able to offer, you know, maybe preferred securities or different types of securities through their already registered entities. So I think that that's a big point of innovation that will come, but I think we're 12 to 18 months away from that right now.
So I'd like to take, you know, on my panelists, you know, speakers' behalf to thank Bitmain and our sponsors, right, to give us this really good opportunity to talk about the latest trends. And once again, thank you, Nathaniel and team, for putting all this hard work to organize this for us. I'll pass on the baton to you, and thank you again for you know, inviting all of us here.
Yeah. So thank you again to the panel one speakers, panel two speakers, and Michael Collier, who's our one of our speakers from the main three speeches, and thank you to Eric and Irene again. So to end this off, I'd like to thank everyone who participated as well. I know you know, everyone took time. We did like we took more than the scheduled time, and we'd be happy to invite everyone again to our next CMF once it's prepared. So I hope everyone's able to learn something from this event. And if you have any questions, just feel free to send an email to marketing@bitmain.com. And if you have any questions about this event, we could perhaps help you forward this to one of the speakers, or we could answer this ourselves. So thank you very much, everyone. I guess this is the end of the event.